Hey there, financial enthusiasts! Welcome back to our channel where we break down complex financial topics into bite-sized pieces. Today, we're diving into the world of mutual funds, specifically large-cap equity funds. Are you ready to test your knowledge and learn how to pick the best large-cap equity mutual fund? Let's get started with our interactive quiz. Question 1. What is the primary characteristic of large-cap equity mutual funds? A. High-risk, high-reward investments. B. Invest primarily in large established companies. C. Concentrated in small and mid-cap stocks. D. Geared towards short-term gains. The correct answer is B. Invest primarily in large established companies. Large cap equity funds focus on investing in well-established companies with a proven track record. These companies typically have stable earnings and market capitalization, making them relatively safer investments. Question 2. Which of the following is a key advantage of investing in large cap equity mutual funds? A. Potential for rapid capital appreciation. B. Diversification across various asset classes. C. Higher dividend payouts. D. Lower volatility and stability. The correct answer is D. Lower volatility and stability. Large cap equity funds offer lower volatility compared to mid and small cap funds due to their investments in well-established companies. This stability can be beneficial for investors looking for consistent returns over the long term. Question 3. What is the expense ratio of a mutual fund? A. The amount of money the fund manager invests in the market. B. The annual fee charged by the mutual fund company. C. The total value of assets under management. D. The percentage of profits distributed to investors. The correct answer is B. The annual fee charged by the mutual fund company. The expense ratio represents the annual fee charged by the mutual fund company to manage the fund's operations. It's essential to consider the expense ratio when selecting a mutual fund as it directly impacts your returns. Question 4. Which factor should investors consider when evaluating the performance of a large cap equity mutual fund? A. Short-term returns. B. Past performance only. C. Consistency of returns over time. D. High volatility. The correct answer is C. Consistency of returns over time. Instead of focusing solely on short-term returns, investors should assess the consistency of a mutual fund's performance over various market cycles. Consistent returns indicate the fund's ability to navigate different market conditions effectively. Question 5. What does the term alpha refer to in the context of mutual funds? A. Measure of a fund's performance relative to a benchmark index. B. Outperformance generated by fund manager compared to benchmark. C. Standard deviation of a fund's returns. D. Market risk associated with the fund's portfolio. The correct answer is B. Outperformance generated by fund manager compared to benchmark. Alpha measures the excess return generated by a mutual fund manager compared to the expected return based on the risk taken. Positive alpha indicates that the fund has outperformed its benchmark index. Question 6. Which of the following measures the volatility or systematic risk of a mutual fund compared to the overall market? A. Alpha. B. Beta. C. Sharpe ratio. D. PE ratio. The correct answer is B. Beta. Beta measures the sensitivity of a mutual fund's returns to changes in the overall market. A beta greater than 1 indicates higher volatility, while a beta less than 1 suggests lower volatility compared to the market. Question 7. What does the Sharpe ratio measure in the context of mutual funds? A. Risk-adjusted return per unit of total risk. B. Dividend yield of the mutual fund. C. Expense ratio of the mutual fund. D. Total assets under management. The correct answer is A. Risk-adjusted return per unit of total risk. The Sharpe ratio evaluates the risk-adjusted return of a mutual fund by comparing the excess return generated to the total risk taken. A higher Sharpe ratio indicates better risk-adjusted performance. Question 8. What does the price-to-earnings ratio of a mutual fund's portfolio indicate? A. The total value of assets under management. B. The ratio of dividends paid to shareholders. C. The valuation of the underlying stocks relative to their earnings. D. The risk associated with the mutual fund's portfolio. The correct answer is C. The valuation of the underlying stocks relative to their earnings. P/E ratio measures the price investors are willing to pay for each rupee of earnings generated by the stocks held in the mutual fund's portfolio. A higher P/E ratio suggests that the stocks are relatively expensive compared to their earnings. Question 9. What is the benchmark index commonly used for evaluating the performance of large-cap equity mutual funds in India? A. NIFTY 50, B, S, and P BSE 500, C. NIFTY Midcap 100, D. NIFTY Smallcap 100. The correct answer is A. NIFTY 50. NIFTY 50 is a commonly used benchmark index for large-cap equity mutual funds in India. It comprises the top 50 companies listed on the National Stock Exchange based on market capitalization. Mutual funds benchmark their performance against this index to assess their relative performance. And that wraps up our quiz on selecting the perfect large-cap equity mutual fund. How did you do? Remember, understanding mutual funds is key to building a strong investment portfolio. If you found this quiz helpful, give it a thumbs up, and don't forget to subscribe for more engaging financial content. Until next time, happy investing! For a one-to-one discussion with a highly experienced and knowledgeable finance professional at EA Capital, who always keep your interests ahead of everything and work in a completely transparent manner, you can write to us at info@eacapital.in, and one of our team members will get in touch with you.